morning, I'm Tim Carter. I'm a client portfolio manager on npower's optimisation desk, and welcome to this morning's market update on Monday the 18th of January. So looking at the markets today, we're seeing prices generally a little bit lower across the curve, but there is a bit of support for power on the front month. Key drivers today are, number one, we've got reasonably well supplied gas system despite the highest demand levels through this winter. Number two, we've got those support on the prompt power as wind generation disappoints and interconnector imports are also lower. And finally, number three, we continue to see pressure from the oil markets as Iranian sanctions are lifted and oil trades in $28 per barrel range. Those are your main headlines. If you'd like any more information, please contact us on the email address provided. Otherwise, continue to watch for a bit more detail. So, looking at the gas markets to start with, some of the temperature-driven volatility that we saw last week has subsided a little bit, as forecasts today are roughly in line with expectations from Friday. But today, though, is still pretty cold, and we're expecting that to kind of prolong through the next few days before it warms up into the weekend and then above seasonal normal levels thereafter. Today, though, as I said, demand is high, around 350 MCM, also driven up by higher CCGT burn nominations, which are over 50 MCM today. We have, though, seen good supply-side reaction, with storage sites withdrawing around 90 MCM in total, and we've also got good supply from Holland through the BBL pipeline, where nominations are over 30 MCM. There is an outage over in Norway which is curtailing some of the imports through the Langeled pipeline, which is currently nominated at 57 MCM, so touched down on its capacity, which we have been seeing flowing for the last few weeks. Elsewhere, on the power side of things, as I said, we've seen a little bit of support in the prompt markets today, as peak margins have dipped below 9 gigawatts for today. Wind generation is a large contribution to that. It's only 2 gigawatts at the moment, which is below forecast and is expected to drop off further through today. And then into tomorrow, we're only expecting around half a gigawatt, which is actually pushing day-ahead prices up to around £48 per megawatt hour, which is around about 35% premium on the February 16 prices. So that's quite expensive compared to what we've been seeing recently. There's also been a lower import through the interconnectors from Holland and France today, as temperatures on the continent have dipped and therefore the demand's being soaked up over there. As I said, oil markets are continuing to pressure UK energy markets. So Brent is now trading at $28.50. That comes after the Iranian sanctions have been lifted as their nuclear program has been inspected, and the international community is kind of satisfied that they've curbed their nuclear weapons program. So the theory now is that there's around 500,000 barrels per day of additional supply that will hit the market, probably within the next 6 months or so. But the speed at which Iran will be able to bring those supplies back to market will determine how much lower the price might go. That's it for today. As always, have a great day, and we'll speak to you again tomorrow.